Novo Nordisk stock is again crashing. It feels like I have to discuss this every couple of months, but on the day, as of right now, they're down about 7.81%, and the further you zoom out, the worse it looks. In the last year, they're down over 57%. If we look in the last month, now down 17.5%. The last 6 months, 37.6%, and year to date, about 49%. So the question is, what caused this sell-off today? Now, to get the full picture of what's going on with Novo Nordisk, you have to understand the competition they're in. They're in a massive competition with Eli Lilly right now, and if we just compare the two stocks quickly, we'll look at Eli Lilly as well as Novo Nordisk, their home country ticker. The data will automatically load into my spreadsheet thanks to the help of the ticker data add-on. But here's what we need to pay attention to. Yes, the price comparison, the performance has been quite different between the two stocks, but look at the valuation difference right here. Right now, Eli Lilly's trailing 12 months PE multiple is close to 52. Meanwhile, Novo Nordisk is sitting at 11.39. Why is there such a radical difference in valuation between these two stocks? Well, it's because they're both competing in the GLP-1 market, which has massive projected growth rates through the year 2030. I'm seeing some analysts even project it could grow as fast as the AI market itself. So there's massive market share to be captured by either Novo Nordisk or Eli Lilly. But unfortunately for Novo Nordisk, the reason Eli Lilly is trading at such a higher valuation is because the growth rate projected is significantly higher. Look at this. Eli Lilly projected 3-year EPS CAGR is nearly 24%. Novo Nordisk sitting at 7.22%. Eli Lilly is taking market share from Novo Nordisk, but that's not actually necessarily the reason that Novo Nordisk sold off today. Novo Nordisk recently announced that their post-late-stage trial data shows that one of their drugs, which is a diabetes pill, could potentially also treat Alzheimer's disease. This would obviously be a massive breakthrough for Novo Nordisk. But unfortunately for Novo Nordisk, it was announced today that their Ozempic pill failed to slow Alzheimer's disease progression in large trials. And at one point, this led to the stock selling off nearly 10%. So now the stock is trading at its lowest prices really since around June of 2021. And for reference, if we just go ahead and jump over to our stock screener, let's take a closer look at Novo Nordisk stock. And all the data will load into my spreadsheet. And real quick, if you'd like to be able to get access to any of these spreadsheets in the ticker data add-on in Google Sheets that allows you to automatically import stock financials directly into your spreadsheet, now is the best time to do so because ticker data is currently running their Black Friday sale where you can get 30% off the annual plans and a 7-day free trial by using code BLACK at checkout. Ticker data is the tool that I use to build all the spreadsheets that you've seen in a lot of my videos. Pulling the data into your spreadsheet is as simple as typing ticker data, listing the stock that you want to see, listing the metric that you want to see, and then listing the year and hitting enter. And you can see that data will automatically load in. And if you go to the ticker data website and click on docs, you can see there's a multitude of attributes you can pull directly into your spreadsheet, whether it's the income statement metrics, statement of cash flows, balance sheet data, and there's a plethora of key metrics, valuation metrics, projections from analysts you can pull directly into your spreadsheet. We have over 30 plus years of data, and on top of this, we have over 70 different stock exchanges. So if you're an international investor, ticker data will be your best friend. So again, be sure to use code BLACK at checkout if you want 30% off the annual plans and a 7-day free trial. Now, when we look at Novo Nordisk, there's a lot about the company that at first glance does look really attractive. Earnings per share have exploded since 2020, going from about 903 to in 2024, 22.67. Now again, we're looking at the home country ticker for Novo Nordisk. Revenue per share has grown substantially since 2020 as well, and the same is true with free cash flow per share. And because of this business model, they're somewhat capital light and able to generate very high returns on invested capital. If we simply look at the dividend metrics for this stock. And what we can see is this sell-off has now pushed the starting yield for Novo Nordisk to above 4%, which for reference, this is actually the highest starting dividend yield that I think the company has had in maybe its entire history. If we look at the last 5 or even 10 years, with the sell-off today, again, the yield is now sitting up here. So maybe for a brief moment in 2017 it was there, but this is pretty much the highest yield in the company's history. And they've also grown the dividend substantially since 2020. It's more than doubled. So really the question we need to ask ourselves is this sell-off justified? I mean, for reference, the average analyst price target is sitting at $59.47, giving them about 35% upside. Well, here's what we have to understand about Novo Nordisk. To start, if we look at their Q3 earnings report, they again narrowed their guidance ranges, reflecting lowered growth expectations for their GLP-1 treatments. Why is that significant? Well, that was the 4th time this year that they've lowered guidance. Now, when it comes to valuing stocks, when it comes to projections, it's always about what do you think future earnings and future cash flows will look like. And if you can be relatively confident about what those future cash flows and future earnings will look like, then you can actually be relatively confident about what the future share price will look like. Share price always follows earnings and cash flow growth. But when future cash flows and earnings start to become very unpredictable, investors start to flee from the stock. Now, at times, this can create opportunity. Let me show you what I mean. Again, let's look at them from a sensitivity analysis perspective. To project future earnings, we need to project a future EPS growth rate and a projected PE multiple. Now, the average PE multiple over the last 10 years is 27.3. For the trailing 12 months, it's dropped all the way down to 11.42. So just a radical difference versus the average. The current PE multiple is 58% lower than their 10-year average. Now, part of this is justified because future earnings growth projections have been lowered multiple times this year. Now, we can see the projected EPS CAGR moving forward is about 8.19%. So despite EPS growth rate projections being lowered multiple times in the next year, that's still decent growth projection. Significantly lower than it was, but decent. So let's just assume for a moment that this stock is going to finally meet those earnings growth projections. We'll see whether or not that's actually the case. We'll plug in 8.19%, and then apply our projected PE multiple. Let's assume the PE multiple climbs maybe just back to 13, which is still a pretty attractive PE multiple for a stock that could grow earnings at around 8%. All of a sudden by 2030, we're looking at compounded returns of close to around 8%, which might be slightly higher than average market returns over the decades. But what if we see a lot of multiple reversion, a lot of multiple expansion, getting closer to back where it was over the last decade? That's certainly possible once the fear subsides. Even if their growth rate projection doesn't change, a lot of the times companies growing earnings at about 8% can trade at multiples as high as 20. For example, stocks like Coca-Cola and Pepsi, which to be fair do have much more predictable business models than Novo Nordisk, but they trade at PE multiples well above 20 most of the times. And that's despite them growing earnings at a low single-digit rate, around 3%. So both of these are very possible for Novo Nordisk, and if that's the case, by 2030 you're looking at compounded returns of nearly 16% or a total return of 142%, which on top of that does not include the starting dividend yield, sitting at about 4% that you'd be getting every year, and the yield on cost would likely grow due to dividend growth. That's absolutely worth mentioning. So from a purely numbers perspective, Novo Nordisk is absolutely looking attractive. The major problem is, as long as those future cash flows are highly unpredictable, investors aren't going to be as interested in this stock. If I could feel absolutely confident they're going to achieve that 8% earnings growth through the year 2029, I would absolutely think this is an attractive opportunity. But when you have management lower guidance 4 times in a single year, I don't think I've ever seen that before, you can see why investor sentiment is extremely low. Now, with that being said, today's sell-off does seem a bit unjustified, simply because if it did slow Alzheimer's disease, it would have just been gravy on top. It's not the primary purpose for the pill, nor was it expected to be. Essentially, this wasn't priced into the stock, but it's selling off as if it was. But go ahead and let me know what you think of Novo Nordisk stock in the comments down below. And again, if you'd like to get access to the Ticker Data Black Friday sale, where you can get 30% off the annual plans and a 7-day free trial, then be sure to use code BLACK at checkout. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.